Hey, greetings everyone. It's Dwayne, CFRN, and today is Friday, 13th day of November 2015. That's right, Friday the 13th. All right, we're going to do a recap of the Concierge Trade Alerts that were emailed out last night. I did them on the radio show today, but some of them I did before we went out to Vegas to talk to David, and I did some of them after. There was a lot of talking and pausing and teaching and meaningful hallmark moments. My goal is to do, from this day forward, a 10-minute Concierge Trade Alert recap, 10 minutes or less, and on the one trade a days, 10 minutes or less, which means if you want the meaningful hallmark moments, you'll have to go watch the radio show video, or you'll have to send me an email, support@cfrn.net. Call me at 949-42-EMINI, or set up a private one-on-one mentoring session. Okay? Okay. I'm going to try something. Let's see if it works. All right. In the S&P 500 today, or last night, the alerts went out at 10 p.m. Eastern. It's 2200 hours. On the ES, we said to consider being short below 2036. As you know, even if I think the market's going to go up, I also give you my best work on the short side. It's what I have to do to sleep, okay? Today, I'm pretty convinced the market was going to decline, but I've been wrong before. So what did I do? I did the short side first, because that's the simplest, because that's what I believe is going to happen. I then spin my ball cap around with the brim pointing the other direction, and I do the exact same calculations and produce the best possible long entry that I can give you based upon the exact same math, same calculations, same formula that I've been using now for 4 years. Okay? You'll notice up here I have burned up almost 2 minutes of my 10 minutes. Can you see that? It's counting down. 8 minutes and 44 seconds. Can he do it? Let's find out. Okay. Short below 2036. Where might that elusive 2036 be? Why, it would be right here. 2036. Okay, so the alert's 2036. We need 2 points to be done for the day. In the S&P 500, if you're trading the 2420 blueprint, that's 8 ticks. So in this first hour, price dropped down to 2034. It's exactly 2 points. And at that point, if you caught all 2 points, well, you're just done for the day. We do know that important prices and important areas are almost always tested. Price gets back above the trigger. It drops a second time, and on the second drop, it takes us down to 2033.50. So that would be 2.5 points. 2.5. 2.5 points. Price, once again, gets above the trigger, lets it rip, and it hits one of last week's weekly trading zones. Now, we broke the lowest weekly trading zone this week. Yeah, it's a very rare occurrence. That tells you just how bearish this market really is right now. But you can see that those important prices, they stay important. All right, so the swing low of this candle, we triggered here. The swing low of this candle, 21.25. So from 36 to 21 would be 15, so that would be 14.75. 14.75, right? From 36 to 21.25. Price then goes back one last time to reset, trigger, and give us another trade. The swing high is 20.3675, so it went 3 ticks above the trigger. Only takes one, but down we go, and the swing low is 20.1150. So 20.36 minus 20.11, that would be 25 points. So it's 24.5. 24.5. Now, if you're trading the 2420 blueprint, you only need 2 points. That's 8 ticks. First move gave us 2 points. Second move gave us 2.5 points. Third move gave us 14.75 points. And the final move, 24.5 points. Now, no one gets out at the exact swing low of any move. It's just not natural. What happens is you're trailing. Either you get out at your hard target and you're done, or you get out partially and trail the rest, or you lock in your hard target and trail the rest. And when price retraces, it stops you out. Fair enough? With whatever profit you've managed to lock in. At 2 points a day times 5-day week, that's 10 points a week in the S&P. This one move gave you 24.5. Needless to say, it was a great day for those trading the S&P. All right. Wow, we're running out of time quick, aren't we? The Dow, short below 17,370. 17,370. This was 150 points. 17,370. 17,370 minus 17,153. 217 points. How many points do you need to stay on target and graduate? 20. So 217 points. Okay. This was 150, then it pulled back, and it ended up 217. All right, on the Russell, long above 58, short below 48. We did not trigger on the long side. Here's the 1148. First move down gave us 6 ticks, not points, ticks. We need 10 ticks, which is 1 point. The next move down gave us 12 ticks, which is a point plus 2 more ticks. This move gave us 77. Okay. Now, when I measured this earlier today, this so far had given us 31. But at this point, 1148 minus 1144, I'm sorry, 1140, that's going to be 48 minus 4, it's going to be 8 minus, is that going to be 76? Yeah, 76 ticks, or $760 per contract. $760 per contract. Okay. This is $770 per contract, $120 per contract, $310 at this point per contract. Okay. After the Russell, we've got crude oil long above 41.80, short below 41.30. Okay. Crude oil long above 41.80. The first move up gave us 17 ticks. This final move up took us all the way to 42.21. So that's 20.41. That's 41 ticks times $10 per tick, that's $410 per contract potential. Okay. All right, on the short side, the first move below 41.30 gave us 8 ticks or $80 per contract. That was the potential. The second move down, last time I calculated, and I'm going to go with that. Let's see, the swing low was 22. That's right, 98 ticks. Now, 2 more ticks, and we'd have had $1,000 per contract day. 98 ticks, $980 per contract potential, which keeps the Russell at the top of the leaderboard. Okay, $980 in that, and that was a 1, 2, 3, 4, 5 hour move. Trail your stop. Okay, that's how that happens. After the Russell, after the Crude. Okay, that was Crude. I was talking about the Russell being on the leaderboard. Well, it is on the top of the leaderboard. Crude and bonds are right behind. Now, you are down to the Euro, the 6E. Obviously, we ran past our 10 minutes, but I'm doing pretty good, right? It's only been 11 minutes since I started the recording. So for me, that's really good. Okay, on the Euro, we said to be short below 10770. First move down was good for 14 ticks. Now, the first move was 14. Okay. From 70 to 58. I'm sorry, that was 12. The move next door was worth 14. $12.50 per tick, so you only need 8 ticks in this market. See? 12. Then important prices, important areas tested. 14. You only need 8. Just 1 8, and you're done for the whole day. Finished. So 12, 14. We trigger again. This time, well, 44 I think was right there, but the complete swing low would be 718. So 70 minus 20 would be 50, so it'd be 48. 48 ticks. Swing low. Okay, that's not, let's do 48 times 1250, $600. Now, you're not going to get $600. Why? Because unless you're psychic or psychotic, you're not going to get out at the exact swing low. Unless that's your hard target for some reason like, oh, I don't know, maybe it's a weekly trading zone or some other good reason as to why that's where you're going to exit. And even if you're, fairly certain price is going to stop there and reverse, why not trail a stop really close, like, a couple ticks behind, just in case it doesn't do that, just in case it keeps falling. Now, the swing low was 107.18. I just wanted to look and see if that happened to be near a weekly trading zone. No. So we could have fallen all the way to 680 before we hit a weekly zone. Overhead was the zone here at 30, and so you can see it sort of made that turn back up at 30. Okay, all right, we're doing real good. Let's keep moving. Gold, GGCZ5, long above 1086, short below 1077. I do believe I've got this one all marked up for you. All right, the first move up was good for 1086 up to 1087.40, but we got to bump it up a tick you understand, because it says to be long above 1086. The first spot you can get long above 1086, 1086.1. So there was $130 per contract available in the first move. That means you're done for the day if you're trading the blueprint. Important prices, important areas are almost always tested, so price gets back below it, bang, gives you another 17 ticks at $10 per tick. That's the potential, that's what's there. You're going to get stopped out with something as it pulls back. If you're trailing your stop. If you're not trailing your stop, you're going to get stopped out at break even, or even worse, at a loss. We strongly believe in aggressive risk management. Now, price gets way down here. Now, the trigger on the short side did not trigger. That was 1077. That's where the calculation put it. However, look what happened on this candle. Price ran all the way up. Important prices, important areas, almost always tested. And it gave us 19 ticks. That's $190 per contract potential. So we had 1, 2, 3. Really had 4 opportunities. I just calculated 3 of them, I guess. That's okay. You get the point. If you were trading gold today, you did good. All right. Next is bonds. Bonds wasn't so hot today, but I'll show you anyway. Okay. Today in bonds, we were told to be long above 153.15. $153.15. Of course, as with everything, you got to bump it that 1 tick. So you're actually going to be long at 16. The swing high is 21. So that's 5 ticks times 31.25 per tick. Now, what's the chance that you're going to get out at 5? It's possible, but 4 is your hard target. See, remember, with the 2420 blueprint, we're shooting for a goal of $100 per contract per day. The fact that these trades go beyond that, I mean, that's awesome, and you'll grow into that in time, all right? But this trade enabled you to get your stop not only to break even, but also it allowed you to take your 4 ticks profit for the day. In bonds, our goal is 4 ticks. That's $100. I'm sorry, that's $125 per contract. The S&P, soybeans, and the euro paid $12.50 a tick, so we need 8 ticks to be done for the day. And then the other markets, gold, crude, $10 per contract, $10 per tick, so you need 10 ticks to make the $100 per contract and be done for the day. Now, we're not trying to tell you that you're supposed to make $100 in each of the 8 markets. No, you're supposed to make $100 gross per day, period. Just try to do it in 10 trades or less. Now, many days it'll take 1, 2, 3, 4, 5 trades. Every trade you don't use rolls forward. You get to use it the next day or a week from now, whenever you need extra trades because you're having a rough day. So you're never tied up in a knot when you sit down to start trading, okay? You're calm, cool, relaxed, collected. You don't have any fear that you're not going to be able to make your goal for the day because you have so much ammunition to work with. That's the point of it, okay? So on that rare day where it takes you 10, 11, 12, 13, it's okay. You got a drawer full of rollover trades. You're also going to end up with what's called rollover percentages. That's going to happen too. See if I can show you a quick example, and then we'll be done with this recap. All right. Let's say on this trade here, okay, on the Russell. The goal, you need 10 ticks to be done for the day. And so let's say that on that 6-tick move, you go to break even, you lock in 1 to cover commission, and then at 6, you goose it one more time. You've got 3 ticks locked in. It comes back, takes you out. Okay, so you've used 1 trade, you got 3 ticks of profit. Next trade runs 12 ticks. You have a 10-tick hard stop. Three plus 10 equals 13. Yes? 3 plus 10 equals 13. Okay, now that is 130% of 1 day's production. In other words, $100, you meet your goal for the day, you're done. You didn't try to get 13 ticks, it just happened because you were stopped out with 3 and then you hit your target of 10. So what happens to that 30%? Well, you put your rollover trades in your left-hand drawer and put your rollover production in your right-hand drawer. So tomorrow when you come into work, you don't have just 10 trades to work with. You used up 2 trades, so you have 8 rollover trades. So when you come in tomorrow, you've got 18 trades, 10 fresh trades every day, plus whatever rolls over, 18. And then in your right-hand drawer, you've got 30% of 1 day's production. Now, does that mean you're only going to go for 70% tomorrow? No. You're still going to go for 100% because you want to build up that kitty of rollover production. You want to build that thing up as big as you can, and you want as many rollover trades as you can possibly have in there. We even have on our website for the members, in the members area of the website, should you become a partner, you'll have access to an app built by one of our partners. It's called the CFRN Daily Production Tracker, built by Dan S. It is a marvelous tool. Each day, at the end of the day, you'll export all of your data out of your platform, either DT Pro or Ninja, whichever one you're using. You'll import it into the Daily Performance Tracker. Now, it's an app. It's got a nice little dashboard. When you launch the dashboard each morning before you start trading, it tells you how many rollover trades you have at your disposal, and it tells you how much rollover percentage you have at your disposal. And so it makes the beginning of each day so much more pleasant. All pressure has been removed. All you have to do is just sit down and go to work. That's going to wrap it up. We didn't pull it off at 10 minutes, but I'm working hard. We did it in 23 minutes. I did just a little bit of teaching, a little bit of preaching. If you have questions, call me 949-42-EMINI or send me an email, support@cfrn.net. Now I'm going to follow this up with a video recap of the 1 trade a day trades for all 8 markets. And again, I'm going to strive to do it in 10 minutes or less. Thanks so much. Have a great weekend. I'll see you Sunday night at the bell.